Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 9th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. As I've mentioned before, not a whole lot of economic data today. We do have the 30-year bond auction a little bit later on here in about an hour or so. And then we also got the natural gas storages came in at a drawdown of 152 billion cubic feet, which was expected. And we had wholesale inventories come in line with expectations as an increase of 1%. Finally, we had unemployment claims come in lower than expected at 234,000, expected to be 250,000, so that was better than expected on that front, and less unemployment claims is consistent with less people looking for work, obviously, and that means more people being hired or retaining their jobs. So all of those numbers pretty decent today. The overall markets are up. Crude oil continuing to cruise higher, despite the fact that we had the second largest build in crude oil in history yesterday come out. So crude oil cruising higher, up about 73 cents on the day. Then we have gold giving back all yesterday's gains and looking to try and go back below that 200-day moving average. That was the line in the sand that we were trying to get above that target that I've been talking about for better than 2 weeks now. I don't know if that's going to hold, especially with the way that the equity markets are acting at this point right now, with everything just blasting higher. Bonds reacting to that. Yesterday, bonds were kind of bunking the trend with the overall equity rally, and we're up over a point today, giving that all back. And right now, as we speak, looking to just go below that 9-day moving average. So it's broken, piercing below that. The settlement below there will be a win for the bears, and I really don't see it holding with the equity markets the way that they're acting, unless we got a huge pullback or something. But the Dow Jones Industrial Average, as you can see here, up 132 points on the day, and a new historical intraday high. To settle here would be a new historical intraday or settlement as well. So 20,197 right now on the highs of the day. NASDAQ again, it seems like we're going to be saying this every day. New historical high, 52.18 right now is the high, just slightly off of that by about 6 points. But the market's really just not taking a whole lot of a breather. As you can see, the charts look almost exactly the same. The E-mini S&P is up 14 points on the day and just off of their highs of the day by a few ticks. This is the breakdown of the E-mini S&P chart. You can see we're consolidating up here, and the overall market taking a bit of a breather, but really been unabated all morning from the open straight till now, and consolidating a little bit. Might see a little bit of longs cover, but at the end of the day, the market is just off to the races. One thing I'm looking at, I have my synthetic short in the E-mini S&Ps and the SPY ETF. I am ready to pull the ripcord on that, which could indicate a top, I guess, as the shorts are really starting to call uncle, and that's what this is feeling like, is almost like a capitulation moment to the top. So I'm feeling like that. The overall rest of the shorts might be feeling that as well. So that could indicate that there is a top, because I am very close to pulling my ripcord as well. This is Disney. This is a trade that I added today. I needed to add some long deltas. Disney beat earnings not too long ago, and if the overall economy is starting to look to turn around, and a lot of people are feeling that way, Disney is going to be one of the benefactors of that, because it is a really good economy type stock, because people, when they have extra money to spend, they are going to go to Disney. When the economy is not doing too good, Disney is going to be hurt for that. And Disney came off a little bit, sold off on their earnings, which were better than expected. So I decided to take this opportunity to get long some Disney, and did it as a poor man's covered call. So I went into the January of 2018 and bought the 100 calls, and then sold the March, which expire on the 17th of March, 115 calls. So I did that all for $13.80. So looking for Disney to push to the upside. I've done a webinar on Poor Man's Covered Call if you want to learn how to set that up. I don't really ever go out there and buy just the stock. I usually, unless it's been put to me or something along those lines, is the only time I usually go out and purchase stock, because you get so much margin relief when you do it as a poor man's covered call, in a sense. And I've done that with this. It should act the same way as the stock for all intents and purpose. But the beauty in this is it's got a synthetic put in there, so it's limit my risk to the downside, and the covered call acts the same as a regular covered call on a normal stock. So Disney, ticker symbol DIS, poor man's covered call in there to add some long deltas to my portfolio. Kraft is like blasting off higher. They did beat earnings. It wasn't as great as I thought it was going to, or as great as it's reacting, but with this, they came out with better than expected earnings. Really looked like they wanted to blast off. The broader market hadn't taken off early this morning, but anytime I'm doing an earnings trade and I have a winner on, I'm not going to let that thing ride out much longer than that. I'm going to get out as quickly as possible. So at like 8:03, I think was the time that I got out of this trade. I actually legged out of it. I bought the puts in first for a nickel, and then worked my calls to get out of it, but it was within minutes of each other. So what I had done in there is the February 77 and a half strangle in there, and I originally paid collected 60 cents for that. Bought the puts right around 8 o'clock for 5 cents a nickel. I had to pay out. I traded in nickel increments on that, and then got my 77 and a half calls for 35 cents. So not a huge winner, but at this point in time, it's not a whole lot higher than where I got it. I think 803 was right in this when I got that bit of a pullback. Wasn't looking too good. It was looking like a scratch for a while, but that just minute of pullback, I was 15 minutes of pullback. I was able to get out of that for 20-cent profit. So that one worked out quite nicely. But in that, I'm also looking to put on a trade here in Kellogg, ticker symbol K. Same situation where I'm looking to do a poor man's covered call in here as well. So looking at like the Jan 60 calls in 2018, and then selling some March 80 calls here that expire in the next 30 odd days. So that Kellogg looking pretty good, and they are off to the races. I could easily see them traveling back up here into the mid 80s easily in the next year or so. So that's what I'm working on with that one. That's about all I got for you guys. The other thing I'm also looking to do is buy some MasterCard, higher interest rates, MasterCard, Visa, those type of stocks are going to do very well. So are the banks. So I'm going to add some long deltas in that. It's kind of gotten away from me since I initially put on those calls, but I'm just looking at doing the April 110 calls and buying those. So that's about all I got going on right now. Tomorrow's webinar is going to be on the broken wing butterfly, so we can create a butterfly where we can limit our risk to the upside, actually even be profitable if the market kind of rallies and goes outside of our short wing. So I'm going to show you how to build that up in a bullish market, or the type of scenario we've seen right now where the market kind of pops up, settles back down. That will work out for some of these stocks. So go to protraderstrategies.com, sign up for that. And if you can't take that, take it easy.